Shaping the Future of Embedded Finance in Southeast Asia. Markus Prommik, CEO and co-founder of Finfra, allows digital platforms, payment gateways, to offering white-labeled credit products, to bridging Indonesia's 235 billion plus SME credit gap. How does embedded finance differ from banking as a service?
Two sides of the same coin. So where embedded finance is really integrating financial services, financial products at the distribution points. And that's the other side of the coin, is connecting with the licensed platforms and licensed payers.
Where do you see the biggest growth opportunities for embedded finance?
SME credit. The second, insurance. Third and fourth, consumer credit and overall payments.
Hello, everyone, and welcome to Decoding Embedded Finance podcast. I'm your host, Michael Petrilli, Director of NextGen Investing, and I'm thrilled to be joined by a guest who is shaping the future of embedded finance in Southeast Asia. With us today is Markus Prommik, CEO and co-founder of Finfra, a company that's powering embedded lending across Indonesia. From building infrastructure that allows digital platforms like POS providers, payment gateways, and supply chain networks, to offering white-labeled credit products, to bridging Indonesia's 235 billion plus SME credit gap. Markus and his team are redefining access to financial services in a region that remains largely underbanked. Markus, it's great to have you here. Before we dive into the heavy stuff, let me start on a lighter note. What has surprised you the most about living and working in Jakarta compared to your early career in Estonia?
Hey, Michael. Pleasure being here, and thanks for hosting, and thanks for the great introduction. The first question, I think we could have a podcast for hours on that, considering the differences in the market. But I would say Indonesia and Estonia, they're like a yin and yang, right? So Estonia, which is a small nation, very digitally developed, but not the friendliest people in the world. Whereas you come to Indonesia with super friendly people, at the same time, huge room for digital innovation, and most importantly, a market of 280 million people and 60 million plus MSMEs, which is a massive opportunity.
Mm-hmm. Yeah, it's definitely a massive opportunity. And from your perspective, you chose Indonesia because of those things you just talked about, right? The friendliness, the opportunity, and also there's been a lot of growth in the area, right?
Yes, correct. So I first moved to Indonesia in 2016 at the age of 22 as a young and aspiring entrepreneur. And when I moved here, then these were exactly the factors that I looked at. And we were here to launch a consumer app and consumer finance company. And these were exactly things we're looking at. We saw that the digitization is on the rise, with some of the leading companies today, like Gojek just being founded a couple of years ago, and Tokopedia, which recently got acquired by TikTok. So we didn't only see a massive population, but we also saw how people's mind was being shifted from doing business the traditional way to becoming more tech savvy and digitalizing day-to-day operations and day-to-day activities.
Yeah, so all in all, it seems to be working out really well for you. So taking a step back for listeners that are new to the space, how would you explain embedded finance, and why does it matter for an everyday person?
Yeah. It's a good question. And the way I would look at embedded finance is where embedded finance means that financial services are available for the consumers and businesses at their at the platforms or at activities they do on a day-to-day basis. You don't need to go to a bank anymore. You don't need to go to a separate app. And I think what it matters for day-to-day consumers and business owners is the convenience that you're about to get from there. And I think the best example to look at there would be, in early 2000s, I think we used to go to a bank to do everything, to get your car leasing, to get your insurance, to get a loan. Whereas now, if you're shopping on Amazon, you can do the same things at this environment. You don't need to go to a bank anymore. You don't need to go to an insurance provider. And this is what we see as embedded finance, where those financial service activities are brought to your everyday brands. And it matters in our view because it makes finance in the background invisible, but at the same time, it really improves accessibility. Who can access financial services, who are eligible for financial services. And especially in emerging markets where trust and access is very important. But at the same time, the additional risk management that you get from there, right? So the better ability to underwrite, acquire, and so on.
Mm-hmm. And yeah, as I was thinking about this as well, like personally myself, I think I've been to a physical bank maybe 4 times, but I've interacted with bank product a lot, right? Online, you can open CDs, you can open checking account, open a credit card, open a mortgage. You can do basically everything online.
Yeah.
And I think what's even more important is for those emerging markets, like here in the States, we think, oh, bank, like it's very close to me. I can drive 10 minutes. But for other parts of the world, right, there's not necessarily an established brick and mortar, but they do have access to smartphone. And I think that's where we can really, like, embedded finance has expanded the ecosystem dramatically in ways that we don't really think about in the US as much.
Exactly, and I think and thank you for putting it into context, right? So, and even if you have, let's say, a bank branch a couple of kilometers down the line, often the travel time there, the traffic jams, everything involved will just make it a very, I wouldn't say mission impossible, but close to that to make it on time, especially within the working hours. But now, for example, in Indonesia, a platform such as Gojek, which is equivalent of Uber for Indonesia, but with much more services around it. And I would say majority of Indonesians use that on, or at least in tier 1, tier 2 cities, use it on a day-to-day basis. And they order their cars from there if they need to go from commute from place A to place B. They can get their groceries there. But also now, for example, they're able to get installment loans for the day-to-day needs, or even businesses that are selling on that platform can get business loans from there. And I think that has kind of made it really accessible and scalable.
So how does embedded finance differ from banking as a service in terms of delivery and customer integration?
Right. So I think often those terms are also used interchangeably and depending on the context, but I would say that they're being a bit of a two sides of the same coin. So where embedded finance is really integrating financial services, financial products at the distribution points, right? Where the borrowers or where your customers and end users are already transacting. It could be for investments, payments, or credit. Then banking as a service is giving access to banking capabilities like accounts, cards, and that's the other side of the coin, is connecting with the licensed platforms and licensed players. And that usually goes through APIs, and that usually requires a direct tie-in with a licensed bank or a licensed provider. Of course, there are cases, and we'll tell more about those Finfra, where we both own the APIs and the licensing to do that. But in most cases, the embedded finance and banking as a service are two sides of the same coin.
Yeah, I really like how you made that distinction, but also the similarities there. Really broke it down nicely. So let's talk about Finfra, your business right now. So what inspired you to build Finfra?
Well, we built Finfra out of the frustration that there was actually no kind of real good quality service providers that provide access to underbanked SMEs. But how we got to that frustration, that goes about 9 years back or almost 10 years back when I first moved to Indonesia, when we built our first company, Dana Bijak, which was focused on accelerating access to credit for the underserved business owners and individuals in Indonesia. And essentially, we launched very simple financing mobile app, which was basically, it was only available online, digital finance only available through your mobile app. And while we scaled the business to double-digit millions in revenues, profitability, then in 2020 with COVID, we saw some of the systematic risks that appeared with it in emerging markets, collectability and so on. And that's when we realized that while there's already access to credit in Indonesia and other Southeast Asian markets, especially driven by the fintechs that were established in mid to 2010s, we realized that a lot of that the access is solved for, but a lot of the products are not sustainable yet. And sustainable for the borrowers because of the higher interest rates and the cost of financing. And obviously, then that question comes down to, so what drives, what's the reason that the cost of financing is so high? And we came to an understanding that there's the cost of servicing was driven very high because of the cost to underwrite, acquire the data, then collect, and NPLs. And that's why in 2021, which was the year before we established Finfra, together with our co-founders and team, we went to the blackboard and we started thinking of like, what are the ways how we can reduce the cost associated to distributing credit by 10x in emerging markets. And that coincided with, I would say, globally, when you could see that a lot of embedded finance platforms were starting to rise, and both in the payments, in insurance, in investments, in credit. And that's what we realized also, that similar trends are happening in emerging markets in Southeast Asia, in Africa, in Latin. And we made a thesis based on calculations and data that embedded finance would support in reducing the servicing cost by 10 times. You're working with already existing distribution partners. All of them have customers and data, right? So you can market with only marginal cost, right? So you don't need to pay Facebook or Google for the ads and leads. Second, you can utilize the data to better segment the customer. So one of the challenges when it comes to credit in emerging markets is the very low approval rates, and it's single digits, usually 3 to 5% for banks, which means that for every dispersed applications, you need to analyze 20 to 30. And if you put that kind of funnel into perspective, it's not very efficient. Whereas with embedded finance, you're able to use the data from the platforms where you distribute, pre-select the customers, and then sell the credit products to those that are pre-approved. So what we've seen in our data sets, our lenders have been able to increase their approval rates from 5 to 50 to 60%, which is 10x improvement for them. And that's a major. And that 10x improvement comes from your operational costs that you need either for underwriters or your customer support team. That comes in data acquisition costs, especially if you talk about paid data, because you already work with platforms where you can get unique data sets. And also, if you're tying it in with a repayment mechanism where the borrower doesn't really have to make the payment, but it comes from, for example, in supply chain financing, it comes directly from the anchor company. In revenue-based financing, you're able to do split pay with a payment acquirer. You're able to reduce the defaults also. And that's kind of what inspired us to build Finfra at the first place in 2022.
Wow, very super comprehensive platform, and also a really, really great answer from you. Thank you. I guess could you dive more into that piece about other embedded finance, and then how you see them more as maybe a partner rather than competition?
Right. So the way we look at the embedded finance industry, and how we break it down, is into few different segments. Obviously, one is in embedded payments space. So payments is one big industry, and that's been growing rapidly in Southeast Asia over the past 10 years. Then, of course, insurance industry, which is similarly has seen great growth, specifically because of lowering the costs and acquisition. And then we're seeing the open banking platforms that are working with different data sources and providers. But in Indonesia, we are definitely one of the few that are solely focused on credit as a starting point. And we've chosen that strategy because credit in emerging markets is very complicated and difficult, especially from the compliance aspects that are associated with it, the risk management, and so on. So from that space, we see we're very opportunistic. We are very positive and we have a very positive sentiment towards the market. And we do see that these barriers are holding us back to competition. Now, the way we work with other embedded finance platforms, and often when it comes to payments or when it comes to data sources, we find them as collaboration partners, because being able to improve the payment journey, improve the repayment journey, but more importantly, is supporting our growth. It's supporting risk management for our lending partners. And this way, we're improving the risk-reward relationship also to the lenders that are operating with Finfra.
Yeah, so it's absolutely a win-win for you.
Correct, exactly.
So you've been in this industry for a while now. So having started at Denebajak and now Finfra, what personal lessons have you learned as an entrepreneur in Southeast Asia, working in fintech, that shaped how you approach the financial inclusion today?
I think there's been thousands of lessons, considering that the starting point was as a 22-year-old first-time entrepreneur moving across the world to Southeast Asia, going into a heavily regulated industry. But to kind of narrow it down to the three main points, I think the first one, which is more of a character rather than a specific skill, would be, I've learned that in the entrepreneurship space, one of the most important things is the triple P, which is then patience, persistence, and perseverance. Running both an finance or lending or credit business, but overall running startups, especially in emerging markets, that has taught me how to, be patient at times, think long term, survive different cycles, and adapt business models to the situation, without losing the end in sight, right? What's your North Star? What's the impact you want to make? And especially in emerging markets, things are always bound to change. There's regulators. You're working with the regulators. You're fighting against well-established corporates and incumbents in the industry, and just the nature of emerging markets. It's growing rapidly, which means that also it changes rapidly. The second, I would say, the key takeaway would be relentless focus on economics and sustainability. I think all business and startups are about discipline, which would be about profitability and sustainability. And that, while growth is important, I realized that that's also something that has to be prioritized. When we started Denebajak as the first business as 22-year-old entrepreneurs around 2016, which was a time when interest rates were at its lowest, fintech was up and coming and booming, a lot of excitement. Definitely, in hindsight, also we got sidetracked from all the headlines and sexy news announcement how this startup raised their Series B after 2 years with X amount in disbursements. Unfortunately, a lot of those startups are not around anymore, and I think that definitely showed us the importance of focus on sustainability. And I think that's also necessary to be able to survive different cycles in the business. And last piece, what I've kind of take away from building a business in Southeast Asia is that partnerships help to scale access and inclusion, and that access or inclusion can help you to scale growth. And that was one of the key pillars when we launched Finfra 4 years ago. Let's focus on partnership model, because to get access to I would say the more scalable partnerships, you can't go yourself. You always need to be able to partner, and we believe that building that infrastructure layer, which is focused on partnerships, can help you exponentially accelerate your inclusion as well. As one partner we work with has thousands, tens of thousands of merchants. We don't need to acquire them one by one. We're building that infrastructure, and we're helping them to get access to credit, so we can really heavily multiply that effect.
Absolutely. And I think as a fellow in the B2B space in fintech, we definitely take a very similar approach, right? And I do remember we've been around for 25 years, but through that 2016 and maybe up to around 2022, right? And then money started running out if you weren't running a sustainable business. So it's really great to see that yeah, Finfra has a similar mindset, and I think that's what keeps it successful, keeps it going.
Right, exactly.
So you just mentioned, yeah. So you just mentioned the infrastructure layer. So when you describe Finfra in that way for embedded lending, what does that mean in real world terms for your partners and end users?
Right. So you can think about us as the pipes behind the scenes and within the ecosystem. So if you look at our ecosystem from supply to distribution, it goes. We work with funding partners that are usually the underwriters that are taking the credit risk and making the loan decisioning. For them, we provide our APIs to access the regulatory and compliance, access the distribution partners, different underwriting tools, and payment and repayment methods, as well as servicing like collections. And the value proposition comes in that none of the lenders we work with, they don't need to build in their own, they don't need to get their own compliance and regulatory license, but they also don't need to build their own tech stack when expanding to new market like Indonesia. And we're able to bring down the cost of entry by 10 to 50 times, and the time to enter probably we reduce from 3 years to about 2 to 3 months. So we see that that's from the supply side and the lender side. For the distribution partners, we help them to grow their business. So a lot of the distribution partners we work with, they serve MSMEs as their end users, and their business growth is based on the transaction volume that they can do. But the MSMEs won't do transactions if they don't have cash. And being able to embed credit, we help our distribution partners to grow their business by growing their transaction volumes or helping their merchants to grow their transaction volumes. We also help them to open up new revenue streams, as we often operate on a rev share basis to incentivize all partners. And last but not least, we help those platforms to keep the customers sticky, right? So if our clients or our distribution partners can offer credit as part of the value proposition, the merchants on their platform are more likely to use their POS system or that logistics platform than their competitors. And for the end users, which are the merchants or consumers on our distribution partners, we basically provide transparent access to credit, fast approval, secure repayment options. And as we are a licensed, or our subsidiary that operates in Indonesia is a licensed platform, we also provide building that credit history for them. And that's especially important for the underserved or underbanked segment. So essentially, if you think about Finfra, you can think about like cloud infrastructure for lending, right? So we want to be in the background. We service different industries, although we have our focus areas.
Yeah, so Finfra's acting as that B2B2C player, essentially. And
Correct.
The C being, I'm a underserved SME in an emerging market, right? And my business is growing. I want to, purchase more supply, essentially, from this vendor. And I don't have access to cash, right? So I look towards Finra, and within the vendor, Finra is right there and saying, hey, I'll give you a line of credit for you to purchase these. And then it essentially allows you to grow the business, right? And that's something that didn't really exist a few short years ago.
Exactly. And I mean, to be in an ideal situation, then the merchant wouldn't even realize that it's Finfra who's supporting that that distribution partner or a payments company, POS system, or e-commerce platform to provide access to credit. So we'd like to be the invisible pipes in the background.
So yeah, that white label solution. Really build that brand loyalty as well.
Exactly, right? Because in today's age, I think the brand loyalty and attention is something that those who serve the end users should monetize and should build up on. And we believe the Finfra solution, we are supporting them on doing it.
Yeah, so as a B2B, right, you understand that connection between that customer and the business you serve is very important. And you don't want to be too involved in it. You just want to serve it.
Exactly.
So changing topic a bit, but how how does Finfra navigate Indonesia's regulatory environment while driving innovation in financial services?
I think a lot of regulators don't see the innovation and compliance in the same sentence. But I think over the past 10 years, when we've been operating in the digital lending space in Indonesia, we've learned how to do that. So, specific in Finfra's case, in Indonesia, we operate through a subsidiary that is licensed as by the Indonesia's Financial Service Authority. And every product we launch, compliance is built into it from the start, not added later, right? And the way we approach that and our relationship with the regulators, who have been very progressive, to be honest, then we see that first we would like to always understand what's the regulators' goals. And often across the globe, they come to the same thing: consumer protection, access to finance, and specifically access to productive financing for the MSME. And that's why when we launched Finfra, that was also our core pillar, to focus on platforms that serve merchants or small businesses, so that we can support their Indonesians' economic development, economic growth, and the small business growth. The second point is that we work with the regulators proactively, right? So they are quite progressive, although it is heavily regulated with a lot of compliance tasks. But that's also what's our value proposition we bring to our partners. And we keep an open dialogue with the regulators to make sure that our clients are not only launching products that are regulatory compliant, but that are also innovative and bring that value to the end user. And last but not least, I think there's always room to experiment in a controlled environment. I think it's very important to ensure that your governance and risk management are in order, and that's why the regulatory communications and government relations, as well as very clear internal boundaries, to ensure that things don't go haywire, and that there's always a majority of your, let's say, products and portfolio that are fully compliant, and there's always a room for this, let's say, 3 to 5% of maybe total outstanding that you can test a bit of new things, that even if they are being then rejected, it doesn't impact yourself and your clients massively. So I think together with this, right, so that long relationship and long track record of being licensed by the regulator, working with them, helps us truly to understand what's important for them, what are the boundaries they want to, and the framework they play in. And that's a value proposition that we also bring to our clients, is that expertise, that these relationships, and we guide our clients through, hey, these are the products you can launch, these are the risks you need to take. And often coming from a similar background with our clients, or as startups or as lenders, we're translating also the way we're translating what regulators are saying into language they understand and what makes them more comfortable.
Mm-hmm. I'm very interested about the part you talked about, always building from, compliance first perspective, right? So that the regulators, you can see them, as a partner. You're working and it's good for them, it's good for you. Now, when you're talking about that extra 5% that you're building outside, can you talk more a little about that? Is this innovation that doesn't have compliance yet? Or is this just testing an idea that you think the intent of the law would be okay with, but once the regulators see it, maybe they turn it down? But it's a great think tank idea for you to do.
Yep, correctly. I think it's more on the latter, right? So we always ensure, and again, it's while let's put it this way. Often the regulators are also not black and white clear, especially in emerging market, what's allowed, what's not allowed, and there's room. So definitely where we see that maybe some things have high regulatory or compliance risk, that kind of products and portfolios we always try to keep into minimum, let's say, and we communicated it also very clearly with our either funding partners or distribution partners, that what are those risks and what could be the implications. And I think that's always this playing on them, or being able to understand that borderline of where does it go, how does it work, and what are the risks that you are ready to take as a company, and what are the risks that your partners are ready to take. But that communications within the stakeholders is extremely important.
And we also see, like you said, emerging markets, the laws can change a lot faster than we see in the Europe or North America.
Yeah.
So it makes it more exciting though in some ways.
That makes it more exciting. That's what makes the growth opportunities. That's what drives the growth opportunities in emerging markets.
So how do you see collaboration between platforms, lenders, and fintechs evolving over the next 3 to 5 years?
Well, I think it's going to be I think the adoption is going to be even more rapid than it has been in the last 3 to 5 years. I think, as you said correctly earlier, that a couple of years ago, this kind of service what we offer wasn't even available, right? So you didn't have merchants who could go and just acquire capital or credit from the partner they work with, or from the or software they use. And the way we see that right now, that more platforms are starting to realize that what they hold, users, the data, the workflows that can improve risk management, and they're becoming more and more comfortable to the notion that, hey, we don't need to build it ourselves. We could work with someone as a bank, as a fintech, as an infrastructure layer like Finfra, who's in between, to enable those services to our customer. And we still can keep the customer loyalty. We still can keep the customer ownership from that perspective. And we've seen that across Indonesia in different industries. And that has put us to realize that they are getting comfortable in sharing the data, because again, that data won't be misused against them, plus they will benefit directly. And I think that will allow for more joint scoring models in industry specific segments. Like, for example, if you're looking at logistics platforms, as you work with one, you can become better overall using that data across different logistics platforms, and improve also the risk management and credit decisioning around it. Then second, we see that fintechs can become either direct lenders, as they are taking the balance sheet risk and working directly, or fintechs like us that are becoming the enablers. And the key value that the enablers bring in is the standardization to the lending partners through APIs, through data flows, through reporting around it. And that means that for the lenders, it's getting easier and easier to look at different borrowers in the same industry, as well as work with different platforms from different industries. And I think for the lenders, either banks or I think the banks are going to become more as co-lenders in a risk-sharing component. Unlikely, especially if we're talking about a segment that is targeting underserved or unbanked. They won't become the sole underwriters. They might become co-lenders. But then the ones who are taking the majority of the risk and the majority of the reward are specialized underwriters, challenger banks, challenger lenders like fintechs that are going to use fintech enablers like us in some markets, or then directly integrate with those distribution partners in other markets.
So you're seeing the growth opportunity in both those banks, the legacy, and also, new fintechs emerging that, and typically it's easier for them to partner with you directly. And they're also more open. Fintech working with other fintech is super common, whereas sometimes we see banks, are a little more difficult because they're highly regulated large companies.
Exactly. I mean, embedded finance is changing the way financial services have been working and are used to. And it's changing in a good, positive way by lowering the cost, improving the access. But obviously, a lot of the banks, as you said correctly, they have their own regulatory and compliance aspects they need to keep, and it's not going to be easy to change their course. And that's where they would like to work with, as co-lenders, what we've seen. But at the same time, you have a lot of challenger banks or digital banks. And for example, one of the largest global MSME bank, Time Bank, they've partnered with us to launch their Indonesia MSME lending and merchant cash advance product. And they're doing it because Finfra's value proposition enabled them to launch the market in less than a year with fraction of the cost. And we're seeing very good progress already with the disbursements and with their growth on there.
So this might be a bit of a repeat question, but looking ahead, where do you see the biggest growth opportunities for embedded finance?
So I think the number one obviously is SME credit, and I may be biased saying that because that's where we made our kind of bet and thesis on. But I would say it has opened up multiple of new products, credit products that can be offered to SMEs that can be where SMEs can take their value off, and it's really improved the workflows on how you underwrite SMEs, how do you manage the risk, and so on. The second, I would say, would be in insurance, and it has already happened, but embedded finance or embedded insurance has really reduced the way the cost of distributing insurance, which is often the main challenge for insurance companies. How do you underwrite micro insurance? Because the distribution costs are often higher than the premium you already get, right? Not accounting for the claims and anything else. And I would say third and fourth, I would say, are quite similar, which is consumer credit and overall payments. Of course, for B2B payments, there's like for B2B or SME credit, then for business payments also, I think there's bigger growth opportunities. But what concerns consumer and credit and consumer payments, I would say that's where the least innovation can happen. But I would say that's already quite developed and with the technology. So I see mostly in the SME space. And similar, I think also where we see micro investment, maybe that's on the consumer side, especially for emerging markets where ability to, if you use GoPay day-to-day basis and for every transaction you do, you could be like, hey, maybe invest or save 1,000 rupiah, which is basically 5 cents US dollars, right? Or 5 euro cents. Because you do have those Gojeks and the likes, they have that embedded, they have that user base, they have that active user base. And that's something where I would say we haven't seen as much, at least in Indonesia, but I would say it could be a very interesting growth opportunity.
Yeah, that's definitely right up our alley at ViewTrade, looking at that embedded investing, position with the roundup and potentially credit card, back to reward. Additionally, I have also seen, projections investing is, lagging behind insurance and lending, but hopefully we can boost those up as we head into the 2030s.
Yeah.
So
I agree.
There's there's a lot of new technologies out there, like AI, alternate data, blockchain. How are those reshaping the embedded lending space?
Yep, I think massively, right? So if you talk about AI and alternative data, I think alternative data is the number one key why embedded lending makes sense. Getting that alternative data from your distribution partners, being able to better segment, get more data points about your customer, and this way do have a better visibility of which customers are creditworthy and which customers have which segment of customers has a positive return on investment. AI, I think in credit, AI or let's say machine learning has been around for the past 10 years. So when it comes to credit scoring and credit scoring methodologies, I don't see as big of an innovation perhaps, but definitely what we see with AI and especially generative AI, it has opened up of the quality and the speed and how fast you can build new models, how fast you can deploy those, right? That's for sure. And then it comes to sales and customer support, right? So I think the biggest empirical evidence comes from Klarna, when they, a couple of years ago, or last year, I think 2024, reported that they were able to, if I'm not mistaken, improve their bottom line by $40 million by deploying AI agents into their customer support. Maybe the numbers might be something different, but definitely recommend to check it out. And that is also supporting in embedded finance, right? So how do you deal with the support? How do you deal with sales materials? How do you educate the customers? Because even when embedded to a platform, that end sales to the customer, to the borrower, because we're talking about good quality, especially in credit. We're talking about attracting good quality credit, right? Not the ones that come to you because of a need, but you want to get the ones that might not need you today, but need you, let's say, 3 months from now. Then how you sell to them, how you communicate with them matters. And I think AI is really improving that and making the velocity a lot cheaper and better.
At Finfra, are you using AI for any of your customer service, or is that something you could be offering B2B to C in the future?
Yeah, that's an area where, like most companies, we're heavily looking into and investing resources. We're using it mostly in our sales at the moment, but also moving, and of course, tech and coding and product. But of course, looking at different avenues where both internally and externally we can find optimization and efficiency opportunities, as well as opening potentially new revenue streams. But I think with every CEO who you speak right now, they say
Yeah.
that's something on their top 3 priorities.
Well, Markus, this has been a really great conversation. Thank you for sharing your journey and insights on how embedded finance has unlocked credit access to millions of people in Indonesia. And for our listeners, you can let us know what your vision is for the future of embedded finance, and how can organizations strategically position themselves to seize those opportunities?
Awesome, Michael. Pleasure speaking to you, and thanks for the invitation.
Yeah,
Really enjoyed it.
thanks for coming on. It was a lot of fun.